This is your LMAX exchange technical update for Monday, August 28th, 2017. Euro dollar. So the euro consolidation that we had seen finally broke, with the market taking out the previous 2017 high that was in place in early August at just over 119 at 119.11. The break does now suggest that we could see fresh upside towards a measured move into the 121 to 121.50 area. Of course, this follows this consolidation that we had seen roughly of 200 points, but really more like 250 points between 119.11 and 116.63. And so the break above 119.11 then would project a measured move of similar size that takes us into that 121 to 121.50 area. So we can't rule out that possibility now following this latest break. At the same time, with weekly studies still well extended on this chart, the risk for a serious, significant correction lower is still there, and there is scope for a more meaningful pullback in this uptrend that we've seen in 2017 below this key low here at 116.63, which could open then a more significant depreciation in this market down now towards the 112 to 113 area. So despite this latest break higher, technical studies on a medium-term basis are continuing to track in overbought territory, which, even though we could see a bit more of a push here, the next major move that we do see in this market is still likely to be to the downside, as this correction is well overdue. So don't rule out the possibility now for a quick shoot up here now towards the 121 to 21.50 area, but overall additional upside should be very well capped, if not there or sooner, in favor of this eventual breakdown and correction below the recent lows that we'd seen at 116.63 on the 17th of August. Sterling dollar. So cable has come back down to test some previous resistance, now turn support at 127.75. We've been talking about this level for some time now, and the pullback that we had seen off the 2017 high just shy of 133, we had talked about the market coming down potentially in towards this previous resistance turn support area at 27.75. We've initially seen a very strong bounce out from that level, and that market adhering to that support now, and we could see additional upside now as the market continues to recover out from that level. Overall, however, there still is risk for some more chop here, and we could even see the market extend a little bit lower down towards the 126 area. But at the same time, any setbacks in this market should be very well supported here over the medium term to longer term, with fresh upside eventually seen back above 132.70 and towards 135 and beyond. Remember, the breakout above 27.75 followed a range that was seen for several months after the market had put in a plus 30-year low at 118.40, and so after finally taking out that range high in April of this year, it did suggest that we were seeing a significant shift in the structure. So overall, short term, a lot more chop potentially, even at maybe a little bit more pullback. Medium to longer term, looking to buy dips would be the strategy here in anticipation of fresh upside towards that 135 psychological barrier. Dollar yen. So dollar yen continues to consolidate just off its recent multi-week range lows. The range lows for this market over the past several weeks have come in around the 108 area. You can see that the market going back to into the sort of second quarter of 2017 to present, we've seen this range trade even a little bit before that between 114 and 115 down towards the 108 area, and so the market is consolidating off this range low, and it still is quite possible, it's quite capable of breaking down towards that retest of the 2017 low, that extreme range low at around 108.13. A clear break below there would be a significant development and could then open a more pronounced decline down towards a projected measured move into the 102 area. At the same time, if the market is unable to establish below 108, we could see range resumption, opening the door for upside back towards the 114 to 115 area. For that to happen, though, the market would need to, on a short-term basis, get back above 111. Euro Swiss, not really much to talk about Euro Swiss here. Short term, the market's just consolidating, but following from a medium to longer term perspective, following a very significant breakout this year above 112 resistance, which pushed the market up to its highest level since that January 2015 collapse, that market coming up to 115.40 about. And so the consolidation that we're seeing now is viewed as a bullish consolidation ahead of that next big break above 115.40, that current 2017 high, and towards 120 further up. Aussie dollar. So Aussie dollar is right now chopping around after the market had stalled out by a 2017 high above that psychological barrier at 80. The market could now be putting in a lower top here ahead of the next downside extension with a break below 78.08 recent lows to confirm the lower top and accelerate declines down towards the 75 to 76 area. At the same time, if the market establishes back above 80, then it could open the door for a retest of the 2017 high at 80.66. Dollar CAD. So dollar CAD is in a pullback right now. The market had based out at 2017 and plus 2-year low around 124 before seeing a nice little correction up towards and into the 127s, but the market has since stalled out again and is heading back down towards that 2017 low. Whether or not it gets there is a good question because with longer medium-term studies a little bit extended now following a 10% drop since the 2017 high at 138, it does suggest that setbacks should be limited here and we could still see a more significant upside correction here back towards 130. Initially, the market would need to get it back above the 125.40 area on a close basis, very short term, to suggest that we are seeing a higher low or some form of reversal, maybe even a double bottom, and to get that reversal going to the top side in anticipation of a more significant correction. But overall now, medium term setback should very well be limited to the 124 area to allow for a more significant pullback. Even if we see the market get down back below 124, don't expect the market to sustain weakness below that level. Kiwi dollar. So the New Zealand dollar has traded down below some key support at 72 in the previous week. We did see a bullish reversal day on Friday, which could set the stage for a bit of a bounce, but overall the breakdown that we had seen does open the door for a more significant pronounced decline in this market, potentially all the way back down to 2017 lows, just shy of 68. Remember, the market recently pushed up to a 2017 high above some key psychological resistance at 75, and so we could be in this broader range with the market well capped up here ahead of that reversal back down towards and below the 70 barrier towards that 68 2017 low. SPX 500. The S&P 500 is in the process of potentially showing signs of a top, but we would need to see a breakdown and close below 2400 to confirm this potential top. Right now we've seen on a short-term basis some lower highs and lower lows, but a break back down below the previous weekly low, which comes in around 2417, would be required to strengthen the bearish outlook and potentially open that drop towards and below 2400. Until then, the pressure does remain on the top side despite these shorter term bearish movements, and that does leave the door open for still a push back up to those towards and above those record highs that we saw several days back. Gold. So gold has recently pushed up above the 2017 high, the previous 2017 high, trading up just over 1300 in the previous week, and this sets the stage for a potential move up towards a retest of the 2016 high at 1375 further up. But if we do see setbacks, and they could be setbacks, they should be limited to the 1240 area, which does leave room for a short-term pullback. Only though back below 1200 would compromise this overall constructive outlook for gold.